record now. Yeah. So if you have shared, if you have copied this row here, we can delete these values there. We want to create two columns. These ones, you merge the cells here. These two, you merge. These two, you merge. Sorry, my mouse is misbehaving. You merge, then you come to these two, you merge them. Let me start here. So draft trial balance. So write draft trial balance. Then the second one, we have adjustments. That's what you have been taught to do. Adjustments. The next one, we are supposed to write income statement. Income statement. Then we skip one, we come here to statement of financial position. Statement of a financial position. Then for each, we are supposed to have debit, credit, debit. Oh, now it's not moving. Debit, then credit, debit, credit, debit, credit, then debit, and credit. It's like these ones I did not get statement. Okay. Let's see whether these now will agree to merge and center. Good. This one I see whether they will agree to merge and center. Good. Then I can expand kidogo hapo. This one we can expand it. This one we can expand it. The same case here. So then this one we can bold. Even this one we can bold. So are we up to that point?
Yes.
Good. So what we do from there, we now first of all start working with the additional information. You start by working with additional information. So in the additional information, number one, we are told that the suspense accounts relate to an issue of capital per value. So that one will come to affect, this one will come to affect the ordinary share capital. But maybe before we record that, we can first of all prepare the opening trial balance. The opening trial balance. So let's start here. Ordinary share capital is a debit or credit balance.
A credit balance.
Yeah, so you are supposed to say this one is equals to this, you enter. Remember, we are always supposed to take the figures or to put the figures in using the working. So let me highlight all these cells downwards, and I put the decimals that way. I mean, the comma, and I remove the decimals. Yeah. So then the preference share capital is also a credit balance. So you say equals this value here. We enter. The next one is revaluation reserve is also a credit balance. So equals, you bring it here. The next one is retained earnings. So retained earnings, profits should always be credit balance. So we put them there. Then we have opening inventory. Now, opening inventory is a current asset, so it should be here. So you say equals, you enter. Higher. Trade receivables, those are also current assets. So equals, you put them there. Cash at bank is also a current asset, equals this one, you put there. Then trade payables, those are liabilities, current liabilities, so equals, you put it there. Loan stock is also a liability, long-term liability, so you put it there. Sales are credit balances, so equals, you put them there. Then we have purchases. Purchases are debit balances because they are like expenses. We put them there. Then credit loss is an expense because it's what guys have not paid us. So you put it there. Then salaries, those are also expenses. We debit them. Insurance is an expense. It should be a debit balance. Postage is also an expense. You put it there. Right is also an expense. You put it there. Loan stock interest paid, that is also an expense. You put it here. Then directors' emoluments. Directors' emoluments, those are also expenses. It's like drawings or salaries. So we put them here. Then dividends paid. Dividends paid is also an expense. So we put it here. Then we have dividends paid for the preference. We also put them here. Then general expenses, those are debit balances. We put them here. Motor vehicle at cost, that is an asset. We put it here. Then accumulated depreciation, that's supposed to be on the credit so that it will reduce the cost. Yeah. The next one is office furniture. That is an asset, so it should be here. Accumulated depreciation should be on the credit here. Land is an asset, should be here. Buildings, those are assets, we put them here. Accumulated depreciation should be on this side, so that it will reduce the value. Suspense account, that one, because we are told it relates to the ordinary share capital, it should be on the credit. Are we okay at that point?
Yes.
Now we can do a quick check to see whether it has balanced, though this is not the end of that because we may have some other things that will come in. We can do an auto sum here of these values. Okay. Up to that point, auto sum. Then we come here, we do the same. Sorry, my mouse is misbehaving at times. So we come all the way down here. We do auto sum. Okay, it has gone to the wrong cell, but what I wanted is to see this figure and this figure, the total. You can see they have balanced, eh?
Yes.
Good. So are you able to do up to that point that way?
480, 180. Yes, we are at par.
Okay. Now I can see your time is over. Okay. Yeah. So now, so I think we'll just continue up to where you'll be able to leave. Then I'll, in case I'll be able to finish, I'll send the recording. Eh?
Okay.
Okay. But when you want to leave, you let me know.
Okay.
So now,
Noted.
We have the additional information which I had said you should begin with, so that you don't miss anything. So the first thing we are told, the suspense account relates to an ordinary share capital at par value. So that ordinary share capital, we are supposed to adjust it by removing the suspense account. Remember, in accounting, we do not want suspense accounts. So what we are going to do, because it is on the credit side here, we will debit the suspense account so that this goes, and then we credit the ordinary share account so that it goes back, it goes to the ordinary share. So we will come here, and this is in our adjustments now. Debit is equals to this one. You enter. So when you do this, this account disappears. Then this amount, we come and bring it here. We say should be equal to this one. Yeah, so that is how we treat that item. The next item we are told is that RAD is revalued upwards by 4 million. RAD is revalued upwards by 4 million. So what we are going to do, we will go to the revaluation reserve. We will go to the revaluation reserve, we credit it, and then we debit RAD because RAD has gone up. Now, this value here, we cannot be able to pick it from a cell. It's not on its own cell. So this one will have to enter manually. So let's look for RAD where it is. RAD is here. So in our adjustments, RAD is going up. So we put 4,000 that way. Then there is the revaluation reserve has gone up. The revaluation reserve has gone up. So we come here, we credit it by saying equals to this. Yeah. So the revaluation reserve has gone up that way. The next item that is mentioned there is inventory on 30th of June amounted to 43. So if you look at the statements that we are preparing, they are for the year ended 30th of June. So when we are told inventory as at 30th of June, that must be closing stock. So you come here and check in the list of the items whether you have been given the closing stock. Now, what we can see is just the opening stock. So we need the closing stock on its own. Sasa tutakuja hapa, we add another row here and we call it closing inventory. Closing inventory. Closing inventory. And this closing inventory, it appears twice. First of all, there is the amount that will appear there when we are looking for the cost of sales, when we say less. And then it will also appear as an asset in the statement of financial position as a current asset. So we will have two entries here. So closing inventory to P&L, I think I can use, or let me write in initial full word, to income statement. And then we will have also the closing inventory to statement of financial position. position. Yeah. So how do we record that? How do we record that? Now, how we record it to the income statement here. The closing inventory will be a negative, and a negative is a credit. So in our adjustments here, we will come, this is where we have the adjustments. This is now the statement. And unfortunately, we are not able to freeze this one so that you're able to see because they are not the first rows. So we have to keep on navigating manually. So in the adjustments, this is the credit. This is the credit, and this is the debit. So when we say that it is going to go to the income statement, it will go there as a negative. So 43,150. Let me check whether where we saw it, we could pick it direct from the cell. It's not possible to pick it, so we have to type manually. Okay, then when it comes here as a credit in the statement of financial position, it will go as a debit. So this one we enter. And actually, you can choose to complete that transaction. You can choose to complete that transaction. So we come here to the income statement. We come to the income statement here. We credit this one. We say equals this one. And then we go to the statement of financial position here, the debit. We show that this will appear as our current asset. So in so doing, we are done with that transaction for the closing inventory. Tuko pamoja at that point, eh?
Yes.
Aya. Let's go to the next additional information. Additional information inasema additional credit loss of 1,000 is reported, while expected credit loss is estimated at 2,500 because we are using our figures in thousands. So this additional credit loss, we are going to have it as an increase in our credit loss. So there was a credit loss here, this one. And this one is going to be an expense. It's going to be an expense. So if it's an expense, we debit it here. And because we are told that it is expected to be 2,500, it's expected to be 2,500, we will come down here. We'll come down here and add that item. Add that item. And we say expected credit loss to income statement. Now, this one is a closing balance, and therefore, being a closing balance, it is an expense and also a liability, or it will affect our receivables. So we talk of I have only 10 more minutes. Expected credit loss to statement of financial position. Yeah. So this expected credit loss is an expense. So we are going to come here to the column of the adjustments here On the debit, we put 2,500. And then, because it will reduce our receivables, we are supposed to credit it here in the adjustments. So this one will be equal to this. And because we have said that it is an expense, we will need to come here to the income statement. To the income statement, we show that this is an expense here. And because again, we have said it is going to reduce our receivables, we come here and show equals this, equals that. Okay. The next thing that the examiner has mentioned is salaries and wages excludes amount of 520 due to casual employees hired. So that means that this is something we incurred, but we did not pay, or we did not show it in our account. We did not show it in our account there. So if we did not show, we have to create salaries and wages accrued accounts. Salaries and wages accrued. Salaries and wages accrued. Now what we shall do, because this one has not been paid, it is a liability. So it is going to be on the credit, but it is also increasing our wages. So we shall debit our wages account and credit the accruals account. So how do we go about that? So I'll come here to my column of the adjustments. I look for the wages, BOE. So this is 520. I debit it there. I could not pick it from the cell here. Then I go to the account that I've created. Yeah, there. So it's supposed to be in this column. I credit. So I say equals this one here. And then that amount there, it is supposed to add in my statement of financial position as a liability. So tunaweza malizana nayo by saying equals this one. You enter. And how does it impact my wages here? What will happen is that my wages here will have increased. In the income statement. So I'm supposed to come here and put this is equals to this amount here plus this one. That's how my wages will look like. Okay, sorry, there was a wrong entry here. This credit loss was supposed to affect, our purchases. Sorry, it's not that expense. So this one will have to delete and put it here. It's supposed to affect our purchases. That was, the purchases should go down. Yeah, the purchases should go down. Sorry, that was, I think I misclassified that. Okay. So the next item is, in addition, the audit fees.
Mademo,
Yes.
I have to log out now.
Okay, I can see even our time is almost. So do I complete this or we complete tomorrow together?
If you're in a position to complete this and then you share the recording so that tomorrow we can do something different, I think it would be in order.
Okay. Sawa.
Yeah.
So
Okay.
thank you
Thank
very
you.
much. Yeah, thank you very much.
Okay.
Okay, so we have that amount there that has changed our purchases. The next item, let me see. The next item is the audit fees. Now you will have to log in so that we proceed from there. You have to log in again.